Hey everybody, this is JenMax at REMAX. I'm here today with Brad Brown from Nexa Mortgage. One of the most important aspects of buying a home, let's face it, is you need to have the funding to do so. And Brad is a mortgage broker here in the area, and I wanted to have him come on and talk with me a little bit about what the mortgage process is for folks that are looking to buy a home. Welcome, Brad.
Thanks, Jen. Thanks for having me.
You're welcome.
Looking forward to sharing some wonderful insight.
Well, there's a lot of insight, I'm sure. A lot of things are going on lately. So tell me a little bit about Nexa Mortgage.
Well, great question. Nexa Mortgage is a mortgage broker based in Chandler, Arizona. We've been around for a little over a year. And the reason I joined the mortgage broker side of the business, I came from the mortgage banking side, is because there are a number of advantages to being a mortgage broker. And some of those would be our flexibility of programs, interest rates, lender fees. So really when we're talking about a mortgage broker, we're wholesaler. We're wholesaling the rates versus going to a normal bank. You would be receiving retail rates. So as you know, wholesale is cheaper than retail.
So does it necessarily mean that going to a mortgage broker, you can expect a little bit more latitude with regards to costs and rates and things like that?
Absolutely.
Okay.
I mean, we have a number of investors. We have at least a dozen, if not more, go-to lenders. Once I review the credit report and review the profile of that client, I can determine which box, which lender this program fits the borrower best. Okay. So for instance, you go to a mortgage bank, they have one set of underwriting guidelines. I go to 12, 15 different lenders, and I may have 5 or 6 different underwriting criteria. And really the biggest point that I would make here is credit score, right? Credit scores. We have flexibility to reduce that credit score and still be able to close a loan.
Okay. So what is the loan process? For instance, let's just say I came to you and said, I want to buy this house. What is the process for me?
The process goes like this. Jen has somebody that's interested in a loan. I can either, you notify me, I reach out to them, or they can reach out to me. And it's interesting, people ask me, when do you work? Well, when my phone is on, right? I mean, it's on just about all the time. So I'm reachable nearly every hour of the day and every day of the week.
Sounds familiar.
Exactly, right? So that process then, it's very informal conversation. I want this to be a conversation and also provide education to the individual.
So what things are you asking people for in the loan process?
We're gonna ask them Social Security information, right? So we need to verify what their credit score is. And with those items, it's gonna be your full legal name, a 2-year work history, a 2-year residence history, and a few other declarations. So it's not very cumbersome, and the process can be a 15-minute phone call, or a lot of people like to do it on their own time, and they can complete the application online.
Okay, so application process, not too hard.
No,
Sounds
ma'am.
like it's fairly easy and it requires documentation, my guess is.
Correct.
So time frame from application to close. What are we talking about for someone who sees the house of their dreams but the seller wants a quick close?
That's a great question. Let's talk about the pre-qualification process before we get to them under contract, correct? So I'm gonna pull their credit. We're gonna collect some documents, pay stubs, W-2s, tax returns. Are they putting money down? We need to verify those funds. So this process, the pre-approval process, for somebody that's really organized and can get me those documents, very quick, within that same day. Now somebody that, hey, I have some documents in storage, they're less technologically savvy, it may take a little bit longer for me to collect those documents. Because my number one job is to make sure when you call me with a person, if they want to go buy a house, my job is to ensure that they can qualify to buy the house. So I tend to, if I need to, take a little bit longer through that process. But once they are approved, they go out, they make the offer. We easily close loans within 30 days.
Nice. So what's the fastest you've ever closed a loan?
18 days.
18 days, wow.
Yeah, so realize we're including, they're not just business days, right? I mean, weekends count as 2 days apiece too.
Oh, I didn't even know that.
So there you go, newsflash, right?
Right.
So just keep that in mind. Oftentimes what happens is the loan gets twisted up with another lender. And I have to come in and review the documents, and we can push a file through once they're actually into their inspection period as well too. So being a mortgage broker, we're very flexible. And my team is fantastic and geared for that exact scenario.
So the Arizona pre-qualification, there's a form. For those of you that don't know, there is an Arizona pre-qualification form that is filled out by the lender. And there's a bunch of check boxes at the bottom that newer agents usually don't catch. If those check boxes say no to all of that documentation, for an agent like myself who's experienced, that's a massive red flag. That means no documents in the pre-qualification process have been supplied to the lender, which means this is an iffy, if at best, qualified buyer. So working with someone like Brad, who's going to get that documentation ahead of time, would probably be a smart move, right?
No question.
Yeah.
I mean, here's the troubling part for our business. What do people like to go do? They want to look at houses. So what they typically do is, well, we're looking for some houses. Well, they're going to find a house, Jen. If they're looking, they're going to find a house.
Right.
And so if we can shave a few days off on the front end of that and remove that stress and to educate the borrower about what the process is, because it still baffles me sometimes. People are getting into the mortgage realm of wanting to buy a home and they don't understand the process. Or if they've spoken with another lender and I start probing, asking questions, and I'm not hearing the answers from them that I should be hearing if they're truly pre-qualified with another lender.
Sure, sure. And as someone who works with both buyers and sellers, if I represent a buyer, I want my buyer to be prepared, like a Girl Scout, always prepared. And that pre-qualification form, having supplied the documents, is a way to be prepared. It means your offer on the house is going to be taken seriously. If you're a seller and you get a pre-qualification form where the buyer has not supplied any documentation to the lender, hello, red flag. Not sure I'd want to put that in front of my seller. So give that a thought. For those of you that are interested, I do have a home buyer's guide which goes through all of the processes for not only looking at a home, selecting a home, but purchasing a home in the mortgage process. So email me, remax@jenmax.net, and I'll send you a copy for free. But onward and forward, what are rates looking like? Things have gone up in terms of rates, correct, over the last couple of years?
And back to the education piece, right? Back to the education piece. In the last few years, interest rates have gone up. Interest rates, in the most simple terms, interest rates follow the stock market. When the stock market goes up, interest rates also increase. And there's so much good information going on in the economy that interest rates just cannot, they cannot be where they were 2 years ago. So oftentimes the first conversation I have with somebody is, well, where are rates? And when I say they're in the mid fours to high fours, they immediately step back and say, well, that seems really high. Yes. So historically, they're still very low.
That's very
right?
low. So historical averages?
Historical averages, we're still well below historical averages.
Which are what, 6%?
6-7%.
Anything below that, stop complaining.
Correct. And so
It's all relative too.
And so it's important to educate them because there still is a glut of information available online. And part of my education process is that, yes, you might be able to find a rate online for X. Okay, well, let's go through the fine print. Let's go through the fine print of exactly what that qualification looks like. Your credit scores maybe have to be way higher than the average. You may have to put more money down than 20%. I mean, there's a number of things that go into pricing interest rates. And obviously, the two most important things are where are your credit scores, how much money are you putting down, and then thirdly is what type of loan you are doing as well too.
So rates going up, to me, I've actually counseled a number of buyers to consider buying down their rate if the mortgage payment was going to be too much for them, they felt over time. And so that's a cost associated with getting a loan, correct?
Yes, it is. And there are a few different ways to drive down the interest rate other than having them increase their credit score or put more money down. We have, on the broker world, we do have some flexibility that some mortgage banks don't have. So that's a conversation on a higher level and more education when we're talking to people. If interest rate is a problem, if the payment's a problem, we have flexibility to look into options how to reduce that monthly payment.
Right. Talk to me a little bit about the role that credit score plays. I know you referenced it earlier, but if somebody has, I don't want to say bad credit. What is considered bad credit nowadays?
The average credit score, they say in the United States, is about 680. So
Okay.
most of your banks are going to have a higher credit score requirement.
Okay.
The advantage of the broker is that we literally can do loans down to a 500 credit score.
And you pay for that in terms of interest rate?
You may, obviously, right? I mean,
okay.
interest rate is a key indicator of risk, right? The risk of the loan, the risk is passed along to the client by interest rate, right?
And your credit score reflects that
Credit
risk.
score reflects. That's exactly right. So credit score is a snapshot in time of somebody's history of how they've used their credit.
Right.
Somebody that has very good credit, typically they're going to continue to have good credit. I mean, we understand that, you know, people go through one-off experiences and medical issues and things like that, but generally a credit score today is about what somebody's credit score has been over in the past. So
credit score playing a role, that's fine, but also the amount that you want to borrow must play a role in the interest rate. I mean, there's things called jumbo mortgages. So talk
Correct.
to me a little bit about what those limitations are.
well, it's a great question, right? And so in the East Valley, we're lucky enough to have home prices increasing in value. So there are Fannie Mae loan limits. The Fannie Mae loan limit is the difference between a conventional loan and a jumbo loan, and that's $453,100. So once you go above that threshold, the criteria for approving the loan varies a little bit.
Okay. Do the processes take longer if you have a bigger loan?
No, ma'am,
I
not with
didn't think
us.
so,
No,
yeah.
same process,
Right.
collect all the same information. They do have some requirements, right? They may require more money down. They may have credit score requirements. You may need to meet, you know, into the better than average threshold for a jumbo loan. But typical turnaround times are exactly the same.
Well, as an experienced loan officer, what's some advice that you'd give to home buyers? Let's say for first-time home buyers, what advice would you give?
First-time home buyer is surround yourself with people that are going to educate you about the process. Jen obviously has been doing this a long time. I've been doing this a long time. And something people need to realize too is that we work for free, right? I mean, so it behooves us to do a really good job of educating and walking people through the process because, you know, ultimately we're in this business to make money.
And we don't make money until we close.
Right. So it behooves us is that, hey, I'm going to do a really good job with this person on the front end. Make sure that you know, we do the proper things. Prepare yourself for success, right? And I tell everybody that. Surround yourself with wise counsel. There's information on the internet too, obviously. I mean, almost at times too much information. So it may be you go online and read about an FHA loan and a particular program. Well, that may be a foreign language, right? So obviously, free consultations from Brad and from Jen. I mean, more than happy to sit down and explain the process and try to interpret some of the things that you found online or you may have heard from other lenders. It's still shocking some of the stories I hear out there when somebody speaks with a lender and then I have to, it sounds bad, but set the record straight.
Yeah.
Or at least the way I do business.
Right. And you know, one final thing though, it occurred to me that money for down payment is a huge issue for many, many people. And in the old days, you didn't buy a house unless you had 20% down, right?
Correct.
I mean, when I was a kid, there was no way you got a house unless you had that. That's changed. So what are we talking about for down payments for people?
Really good question again, right? So I'll start with credit score, right? You don't need to have great credit to buy a house, right? There's things that I can help fix. I can help fix credit scores. I can help fix sources of down payment. Where can we access funds for the down payment if you don't have any? There are some down payment assistance programs. You can use 401k funds. You can use retirement funds. You can have a gift as well too, a gift from a family member. So just because you don't have money for a down payment, that doesn't disqualify you for purchasing a home. And if I could add to that is that you don't have to have great credit. You don't have to have stellar credit, and you don't have to have 20% down. You know, 3%, 5%, 10%. So, I mean, the lending world has loosened up since the downfall of, 10 years ago. We need to prove your credit. You know, we need to see your credit. We need to prove your income. We're flexibility on the down payment. So, I mean, the lending world is as good as it's been in a long time in regards to flexibility.
Right. So for those of you that are looking to buy a home, get on the phone. Ask the questions. Don't sit there and think, I can't, there's no way I'll qualify. Talk to someone. Call me, 602-753-6629. Talk to somebody like Brad. Get on the phone. Ask the questions. Email me. However you want to contact that professional, let us know your questions. Because you'd be surprised at the number of people, after a quick conversation with me, realized, wow, I probably can buy a home. Went out and got a home. And I've got a couple of success stories to share with you on my next edition. So but anyway, I want to thank Brad Brown for joining joining me today, clarifying some of the mortgage things out there, and definitely JenMax at REMAX. I'll see you again soon. Thanks, Brad.
Thank you, Jen.